for the panelists working with us today. The first question goes to Mr. Belay Tulu. Mr. Belay, what is your vision for the independent insurance regulator upon establishment is my first question. And what is your view on the need for stakeholders' participation in the process? Please, could you respond on this?
Thank the capital and all of the organizers giving us this opportunity to discuss on matters which are very job and personal. They are very much personal for me as well. This question puts me in a soul-searching circumstance because it asks me what my vision would be for the forthcoming insurance regulatory agency or authority. Setting the vision for this type of institution has its own ways and processes, but I will try to respond or reflect my personal aspiration, wish for the would-be independent insurance regulator. So as someone, as an individual who spent significant part of my active working life as a regulator, and very anxiously waiting for this moment whereby we can openly discuss about the establishment of an Ethiopian insurance regulatory authority. It's very difficult to fully understand and grasp the situation. In any case, my vision for the would-be insurance regulator is that I would like the insurance regulator to be established in accordance with the relevant international best practices, particularly according to the relevant ICPs of the Association of Insurance Regulators, IAIs. So the first thing is, I believe the Ethiopian Insurance Regulatory Authority should be operationally independent, accountable and transparent in the exercise of its responsibilities and power, and has adequate resources to discharge its responsibilities. So the core of the matter is having an operationally independent, accountable and transparent regulator. And I want to give an emphasis for the concept of operational independence. Operational independence, according to the ICP principles, the supervisor is operational independent and free from undue government or any other party, due influence from the government or any other party in the discharge of its powers and responsibilities. So the core of the matter, having an insurance regulatory authority is, one, the regulator should be established in a manner which protects the regulator from undue influence or interference from all parties, which includes independence in essence means having the discretion to allocate resources, institutional relationship and accountability framework between the supervisor and any other government entities. In addition, the independence from the government, the supervisor should not permit. I want to emphasize to this point because I believe this is very important. In addition to independence from the government, the supervisor should not permit excessively close relationship or even the appearance thereof with industry participants, in particular supervised entities. This is a global practice. This is also one of the core principles. The others one are accountability. Yes, like any entity, the supervisor has effective internal governance structure, process and procedure to preserve the integrity of its actions and decisions and enable to account to its stakeholders. The third pillar is transparency. The supervisor is transparent to the public, to the supervised entities and the government about how it exercises its responsibilities. Not only this, but it also relates to the effectiveness of the regulator when the objectives of the regulatory authority are specifically stated in the law. And probably the most common ones are protecting policyholders. That is the first and most important objective of any finance sector regulator, particularly any insurance regulator. And the second one is promote the maintenance of a safe, fair, and stable insurance market and contribute to financial stability. These are the most important ones. In addition to this, I wish, because having established an independent insurance regulatory authority is not a panacea or a solution for all of the problems of the Ethiopian insurance industry, because we all know that there are deep-rooted problems and challenges which cannot be by any means solved or only establishing an insurance regulatory authority. So we have to think about what we have been through, where we aim to go, and it's a collective effort, as rightly my colleague from the Africa Re mentioned in the morning. Developing an insurance market is mainly the responsibility of the market players. The regulator can only provide guidance and maintain an enabling regulatory environment. Apart from that, there is no substitute for the role to be played by the Ethiopian insurance industry and by the insurance companies yourselves. So this is what I believe, where to start, and what my desire and wishes to have an insurance regulatory authority of the Ethiopian market. The second question is the role of stakeholders in the process of establishing the Ethiopian Insurance Regulatory Authority. There are various stakeholders in the process. We have development partners, other agencies, the government, the National Bank, and the Ethiopian insurance industry. So all of them, they have different roles. The World Bank, for instance, have been helping us in conducting subsequent studies about the challenges of the Ethiopian insurance market and what should be done about them. And they are also now financing the project to transition to the establishment of the Ethiopian Insurance Regulatory Authority or agency. And other agencies are also available working with us who support by providing technical and financial support or assistance. And the Ethiopian Insurance Association and the Ethiopian insurance industry have been promoting the relevance of having an insurance regulatory authority in the past, and I hope it will play a critical and very important role in shaping the regulation, the regulatory framework, the proclamation, which would be in the process of drafting. Then I think the role of the industry and other stakeholders would be very much important to establish the desired, the much awaited insurance regulatory authority on a solid rock foundation, because everything boils down to the proclamation that will establish the authority. The financial independence, operational independence, the effectiveness of prudential regulation all depends on the proclamation which should be issued in the coming months. Therefore, we expect a very constructive dialogue which would shape and have an impact on the fate of the regulatory authority. Thank you.
Okay, thank you, Mr. Belay. I think to put similar questions together and to give an insight for the audience, my second question goes to Mr. Netsanet. What is your expectation from the upcoming independent insurance regulator?
Thank you, Mr. Moderator. As I mentioned in my speech yesterday, I mentioned that this independent regulator should be fair and transparent, accountable for the industry, because after the establishment of this independent commission, there will be a lot of directives and proclamation expected. First, proclamation, as I said, proclamation is expected, then the directives and many issues expected from the regulator. So in this regulation, we expect fairness in the industry, in our practice, again in the development of the insurance, and then there will be other activities will be expected from the independent regulator, because when we reform this industry, so we expect that this industry will develop based on the activities will be conducted from the commission. And again, I expect the participation of as Mr. Belay mentioned, the participation of the industry in this establishment and the formulation of even the management and other governance structure. Otherwise, there will be a challenge once this regulator is established in the manner the industry doesn't expect. So it's very important for the industry, even for the association, to participate on some stages. For example, there will be some platform for discussion. I expect that a platform. And again, there will be a forum in different levels. So this must be arranged by the body concerned to process this establishment. So I expect from National Bank of Ethiopia at least to give chance for the association and the industry as a whole to participate and to put its contribution in the establishment of the independent regulator. Thank you.
Mr. Netsanet. And my third and probably fourth question goes again to Mr. Belay Tulu. There is a widely circulating issue that the insurance sector will be opened up for entry of foreign insurance companies after the establishment of an independent regulator. Mr. Belay, can you please clarify if there is anything on progress at the National Bank of Ethiopia? In addition to this, what is your advice for the insurance company in case of opening up and the establishment of the capital market as well? Thank you.
Okay, thank you. I think it's very apparent, and the National Bank has officially declared that the finance sector in general would be opened to foreign equity, to foreign investment, and there is no question about it. The issue is about when would be that. So as far as insurance sector, the opening up of insurance sector is concerned, there is no special preparation so far, because as you know, there is a public debate, frequent discussion upon the banking proclamation, which would mainly address the modality and the manner in which foreign banks would join the banking sector. So as an institution, we are working together on that, because we have to, we can learn from this process how we are going to handle the opening up of the insurance sector when it is decided. Otherwise, so far, there is no clear timeline. My hope is when we address or when we are working on the proclamation for the establishment of the independent insurance regulatory agency, I hope one of the key elements of that proclamation would address the opening up of and the manner in which, or the modalities, or anything that is related to the opening up. Having said that, what do you advise insurers on opening up? Actually, I'm not that. Okay, I think I'm not the right person to advise insurance companies what to do and what not to do. Time, but I want to quote what Charles Darwin has said. Sorry, is not the strongest of the species that survives, not the most intelligent that, nor the most intelligent that survives. It is the one that is the most adaptable to change. So it's in the interest of individual companies to design, to craft a strategy, how to navigate under the changing circumstances. Yes, there are issues which we need to address collectively as members of the Ethiopian insurance industry, but the decision should also take into account our internal capacities, capabilities, and the desire and the strategy that would give us the way or help us to survive in the process. The key issues for me is to sit down and identify what are our core challenges. And most of the time, our core challenges are common. For instance, our usage and application of IT is very much at the lower side. The quality of talent we have is more or less the same. I always thought about the level of professionality in our insurance sector. As you may remember, the last time, our colleague from the Africa Reinsurance has mentioned the relevance of having an insurance college. Without investing in people, particularly insurance business, insurance-related talents and expertise, we cannot think of developing, growing, and becoming professional service providers. As you know, most people start insurance, but the young insurance employees start from what they have learned in the universities. Maybe they can undergo a 1 month pre-service training, and like that, for me, as an outsider, what they start to do is they start to cut prices. Even they don't understand, as far as I am concerned, the theory, the wisdom, which is behind pricing of insurance products. So we cannot expect new products, professional insurance services, by employing people without having the required training and particularly professional training. So one of the key things, because it is already late, but never late than ever, so we have to start investing on people, on technology, and we have to raise our capital. Because 400 million as mentioned by our previous guest, yes, it's comparable. We know we have seen what the minimum capital requirements are there. For the time being, it's comparable to some of the countries, and raising capital only puts you in a dangerous place because the return on equity would go down. So what do you do with the capital unless you have the potential to grow your turnover? So these are the key areas. IT, capital, investing on talent are very important, which cannot be done without the collaboration of other government agencies like National Bank. Thank you.
My question goes to Mr. Netsanet on a similar issue. Mr. Netsanet, do you think upon opening up of the sector for foreign insurers, that Ethiopian insurance companies will compete?
In our current state, I would rather say, no, we can't compete. I think participants in this room, I'm sure will agree with my doubtful state of mind, because as well I mentioned, we are far behind even from our regional insurance companies working in East Africa. Simply, we can take the mobile application on the insurance industries already implemented. For example, in Kenya, you can sell insurance via mobile. You can follow your claim status via mobile. You can access your information in your handwriting file or in your claim file, though you don't make action on it. So online, you can follow whatever you want to follow. But technologically, we are far behind. So once this market open, we expect these insurance companies to play in the country. So how can we compete with this insurance company? On the other hand, our capital is also far behind. We need to invest in our technology. We need to invest in our human capital, because these insurance companies expected to come to our market are innovative. They are very much flexible. But if you see our market, we follow traditional insurance practice. We copy policy from each other. We are not innovative. So we have a lot of challenges to compete the open up result in our country. So it is very important for the insurance companies, especially Ethiopian insurance companies, to think and look forward and start doing strategy. How can we at least play hand to hand with the insurance companies in our region, especially Kenya market can benchmark how we can develop our services, our product, our innovation ways. Even we are not, I can say, we are not even ready to make investment, especially on the technology, till the directive issued from the National Bank of Ethiopia. So we were, much of our insurance companies were really not ready to make investment on the technology. Actually, I can understand that there is a capital issue, but still, if we want to transform, if we want to challenge after the open up of this sector, we have to make ready ourselves. So, as the previous speaker, especially from the InsurTech said, we shouldn't be forced by directives to innovate ourselves, to improve ourselves, to improve our services, to adapt technology. It is a survival issue currently because, as you see, the banking sector is very much digitalizing, but we are going through manual. Even to work with hand-to-hand with the banks, we use manual, they need digital. It's very difficult to go together. So if the market is open, it will be difficult for our industry to compete unless we change our service starting from today. Thank you.
Thank you very much, Mr. Netsanet. My next question goes to Mr. Belay regarding insurance pricing. What is your assessment of insurance pricing in Ethiopia as a regulator? And to what extent does minimum premium help the market? Could you please reflect on this? And also, what is your advice or suggestion as a regulator for the market with regard to pricing?
Okay, thank you. One thing which I forgot to mention is that the issue of capacity is not only an issue for the insurance companies and the marketers. It's also a critical issue for us who are working in the regulatory agency. So, you know, it's a journey to build talent. The current, who we are today, is a result of what we did in the last 30 years. So I sometimes wonder if it took me like 25 years to know what I am currently claiming to know, which is not sufficient, honestly speaking, enough to guide this big industry or to put in place appropriate supervisory tools, you can imagine what is ahead of us. Because maybe next year, by June, let's hope and assume that the authority was established. So it's like Addis Gojochi. It starts to address the most critical issues. If it is fortunate enough, it can address them in 2-3 years' time. But now there are lots of partners and different international agencies who are ready to support there would be insurance regulator. That gives me some confidence. Otherwise, with all of these expectations, whoever would be the regulator, it would be under huge pressure. So I kindly advise you to adjust your expectation accordingly. Coming to the pricing issue, one of the unique characteristics of insurance business is it is the reversal of the production cycle, which means you know the actual cost of your product and services after some time, probably close to a year, after you sold your product. In other sectors, the production cost would be determined in advance. Then you mark up any amount of profit on that and you sell. So you know in advance what would be the result of your production if your sales estimate goes according to your plan. However, insurance, by its unique nature, you sell a product today at a price which that depends on the circumstances, whether the risk occurs or not. And if it occurs, you don't know when it occurs and how much it will occur. We know only the maximum of our liabilities. So it is under these circumstances that insurance operates. Because of this, the pricing of insurance is always a difficult one. Add to this, the unethical, sometimes suicidal price undercutting that would multiply the problem. So they say also, insurance pricing is cyclical. Yes, there are times when the result of the business is high and people will start to join the industry. Actually, this is theoretical. We haven't seen happening in our market. When the results are good, investors will come, and one of their entrance strategy would be pricing. So they come up with a lesser price, then the competition goes on, and after a while, some companies would go out of the business or the market because of insolvency. So this cycle will continue, and there are different approaches, regulatory approach about control of prices. Yes, there were countries which used to have tariff, including the well-developed markets. For me and for many people, tariff seems to be the thing of the past. Regulators should not base their prudential regulations on setting price tariffs. There are other ways, particularly as we transit to the risk-based capital regime. The insurance risk would very much take into account the effect of price. So when the price goes down, companies, individual companies who did that would be charged additional capital. So the capital will indirectly address, in my view, so far as I understand, the nature of RBC. This can be addressed through RBC. For the moment at least, we have seen, I cannot repeat what we have gone through when we try to implement or approve the first of the tariff questions, the tariff proposal. As you can imagine, we haven't claimed that we are experts in actuarial issues. However, we must make sure that the price we put our stamp, should not be unfair for policyholders. There are two incidents which very much surprised us, people in the insurance supervision. While we are processing the approval of this rate, as you know, you have already implemented what is proposed by the actuaries, and not few persons, even some of them are very much vocal to the insurance industry, start to complain about the price hike upon renewal of motor insurance policies. So this is where we have to decide. We have to make a decision. If people of this type who are well informed are complaining about the increase in the premium, who is going to defend or protect the innocent car owners? So under such circumstances, what we preferred and decided was, even there was a pressure, why do we need to have in the first place a price control under a free market? So we have to balance all of these things. In any case, that helped much because we have seen on average between 50 to 70% growth on motor portfolio, starting from November last year. So we'll closely follow, monitor what is going on and about the result. And it is also important to mention that there are attempts here and there to even go below what we have agreed to maintain. So sometimes, should we protect a company or a CEO who wants to jump from a cliff? That is up to the company. So as a regulator, what we can do is to protect the policyholders if companies went bankrupt, because regulation, supervision is not a guarantee to avoid bankruptcy. Companies who are not managed properly will go bankrupt. Then the issue is how can we minimize the effect of bankruptcy? So pricing would continue to be a serious issue, and not only from the insurance industry. Almost all reinsurance companies visiting the Ethiopian market complain about the pricing of the Ethiopian market. So it's not an issue only for the regulator. It has to be also addressed from the market side as well. Thank you.
Mr. Netsanet again. How is the current practice of insurance pricing affecting the growth and competitiveness of the insurance industry? And what makes insurance pricing a challenge for the industry? Could you please reflect on this?
Okay, let me start from the second question because it's very important. It's a base for the challenge of the growth. Our base of competition, the price is, as by the way, Mr. Hassane mentioned earlier, is based on attraction and retention of customers. Always when we try to quote, even if very high loss ratio, even that business not profitable, we rather focus on setting a price commensurate the risk or the experience of the client. Rather, we negotiate with the client to retain because we don't want to lose that business. The other competitors, they could have information about the experience of that client, but still they need to snatch that business, though it is very high claim ratio or loss ratio. So from the other side of the market, they want to attract with very much discounted rate. And from the owner of that business or the one who is insuring that business is going to retain with a discount premium. So all is practices about undercutting the rate. So this affects even the growth of the premium in the market. If you check, we always report, especially in EIC, we report the growth of the risk we shoulder. Sometimes it increased by 75%. Even in our third quarter, the growth of the risk or the term insured increased by 50%. But the premium is about 32% growth. Even there was a time when we report about 75% growth with 15% premium growth. So the risk increases, but the premium doesn't grow with that risk. This is the issue. The other thing is, in our growth, we are not focusing on the untapped market. We usually play in the limited market where insurance companies snatch businesses. One customer could have insurance with Mr. A insurance company this year, and next year it will be snatched by the other insurance company. As mentioned in our previous presentation, we have 120 million population. Even if we take life insurance, we have an untapped market. Even in our micro insurances, we can even use our different channels to grow our premium income, even to make ourselves free from concentration of risks, especially in the area of where the customer is forced to buy insurance. We know that most of the insurances we are dealing with is almost they are forced to buy insurances from banks or from the point of this, we call it compulsory insurance in the motor. But the other areas where we can work is micro insurance and agricultural insurances. The good thing is we have initiative from different government organs. For example, last week we had a presentation from the agricultural on agricultural insurance from Ministry of Agriculture. They are now interested to lead the agricultural insurance and the micro insurance concerned with this small scale farming and areas related with the livestock areas of our country. So the Ministry of Agriculture wants to work with insurance companies. So we have this wide market where we can innovate products. We can innovate how can we reach out the areas where could be the channels could be expensive, but still we use different technologies to reach this small scale farming and even low-income groups. So based on the situation of the country, we can modify the services from conventional way of handling it to the modified way of handling this business, for example, using different telecom and banking sectors, distribution channels like mobile banking and other things, so in order to reduce our costs. So unless we engage in this untapped market, our insurance business can't grow. The other thing is already mentioned by Mr. Belay thoroughly regarding the development of capacities on this innovation in the other areas. So we have to engage on that. Otherwise, our insurance sector can't grow. And last but not least, we expect, especially after this, probably the establishment of IRA, probably there could be a policy support from government. Especially, we expect some compulsory insurances which are familiar in our neighboring countries. Especially, we expect policy support on mortgage protection insurance, especially on the area of life insurance where we can expand. And also, there could be some compulsory insurances in the construction areas. We know that there are proclamations which support or forces the contractors and professionals who are engaging in construction and consultancy have to have insurance before the engagement. But there is no forcing policies or directive in this area. And also, we have a proclamation, especially on the labor law, which forces all companies to have at least have workmen's compensation or employers' liability. But it is not the way that forces those companies to have insurance services. So the policy area is expected to support the insurance industry in order to grow. All these things implemented, really, we will see growth in the insurance industry. Thank you.
Of the insurance and what the role of InsurTech globally and in the role in promoting innovation, inclusion, and access to insurance. Could you please reflect on this?
Yeah, thank you so much. And first, my apologies for joining virtually on this important session. I had an avoidable kind of other engagement. Well, coming to the question, actually, innovation in any sector is something efficient and something new that can breathe new life into whatever practice has been so far. Particularly coming to I think the insurance sector, the earlier presentation by Mr. Markos was, I think, an excellent presentation in showing what exactly is also possible in the insurance sector. Innovation could introduce various types of innovation that would improve the efficiency, not only in internal processes, in improving the management of the operation, but also it can help introduce new types of products and services to the ecosystem. Like, for example, the previous speaker was mentioning index-based insurance, for example, area yield index insurance, or various types of new products could be introduced through innovation. It can also help engage the customer more, not only engage, urban and nearby customers, but also reach new markets. One of the issues we're talking about in the morning and yesterday as well is reach, right? So particularly for the Ethiopian market, major market that's outside urban settings, innovation and introduction of technological solutions could be something to help expand the reach of these products and services. So yes, it can introduce a lot of improvement and a lot of ideas into innovation. The case in point being the previous presentation. In terms of expanding it, I think what we have seen from digital financial services in Ethiopia in the past few years could be a very good example. It has been able to bring more than, I think, 80 to 90 million customers to at least transactional account through mobile, right? So this kind of network, this kind of capability can be utilized to bring new customers into the insurance market. Hence, I think its ability to bring inclusion is significant and major. Maybe what I like to add in this question is link it to Belay's explanation earlier. When he was talking about the would-be role of the new regulator, he mentioned rightly mentioned that market development is, of course, the responsibility of the market actors themselves. But I also hope the new regulator will be open and will actively promote innovation in the insurance sector as well. nudging the market, nudging the players to try to explore, promoting various types of partnerships and working with technological entities, and also maybe endorse a kind of a sandbox kind of a approach that would bring in a much needed innovation into the insurance sector. Thank you, Tabra. Back to you.
In promoting insurance innovation and development of InsurTech. Could you please reflect on this as well?
I did not get the question fully, but if you are referring to
the role of
FSD
FSD Ethiopia, sorry, my question
yes,
was
yes.
regarding
yeah.
the role of FSD Ethiopia in promoting insurance innovation and development of InsurTech.
Yes, sure. So FSD Ethiopia in general, yes, FSD Ethiopia is an international NGO, an Ethiopian chapter of the FSD financial sector deepening network, which are operating in various African countries. So one of the areas we focus in is financial inclusion, within which insurance also comes in. So from the perspective of not only creating inclusion across the country for various types of financial services, expanding the types of the usage and types of products and services is also one aspect for us. So with this in mind, with our partners FSD Africa and with funding from the Gates Foundation as well, we have been running what we call the Bima Lab InsurTech Accelerator program, particularly for InsurTechs in Africa. Starting from last year, we opened this opportunity to potential partners, potential interested parties, innovators and courts from Ethiopia as well. What is interesting about this accelerator program is it does not only look at potential InsurTechs only, but it also brings together regulators within the same program, where innovators, regulators, and sometimes some incumbent insurance companies to sit together and talk about innovation, see what sort of new ideas are popping up everywhere, and how those could be introduced to the industry as well. So it also suggests ways of regulating, ways of working together with partners. So in our first cohort, we had 4 companies from Ethiopia who were participating in the program. So it brought together InsurTech innovators from around 10 African countries. So it was also a very good opportunity to infuse and cross ideas across from various countries. We believe there are strong ideas and strong innovators in Ethiopia as well, which was also demonstrated by the end of the program, where Ethiopian InsurTech companies actually won at the end of the accelerator program from all 10 countries. So I'm saying this because I want to bring it to insurance companies' attention that there are actually good innovators in Ethiopia that they can also look at for partnership. Like we said, we're talking about introducing innovation, the need for innovation a lot, and it's not easy for big companies who have been operating in a certain way for a long time to try to be innovators all of a sudden. So one way they can explore is by closely working with these types of insurance innovators, which we call InsurTechs, of course. The latest round has recently closed for accepting new applicants. We hope we'll have more participants from Ethiopian companies. Some of them from the first round has also gone on to try to set up their own organizations as well. Might not always be as insurance companies themselves, but closely working with existing insurance companies. Thank you.
Okay, thank you. So is it possible to give some reflection on how existing insurance companies benefit from the innovative activities of BIMA Lab. So could you please
Sure,
reflect
sure.
on this?
So yes, different from the intention of the accelerator program, which mainly focused on InsurTech companies themselves. We requested our partners as well to open up this opportunity for big insurance companies themselves. The idea was for these big insurance companies to be at least to sit there and be inspired by the various ideas that these small InsurTech companies were bringing. So few companies in Ethiopia participated in the InsurTech company in the first round. We also had additional 2 in the second round of the BIMA Lab Accelerator program. So they were really excited by the program because it also was also a platform, an opportunity for them to validate their ideas, to also see what actually can be done in the space through partnership as well. So by the end of the second round, I think few insurance companies from Ethiopia has picked some of the InsurTech companies to partner with. Hopefully, these discussions, these partnerships are going forward smoothly by now. And then the idea is, these InsurTech companies bring different kinds of capabilities. Some of them could help the insurance companies innovate in terms of introducing new products. Others could work on delivering the insurance products in areas where the insurance companies are not currently operating or present. So the opportunity for partnership presents lots of opportunities for existing insurance companies. And then we strongly advise insurance companies to keep a close eye on the BIMA Lab Insurance Accelerator to see which of them are feasible partners that they can work with, and also for them to also participate and learn about new opportunities in the space.
Excellent. Thank you very much, Mr. Abel. Thank you for your reflection. I think you will stay with us until the end of the program. Now,
Sure.
And you will respond for some of the requests or questions coming from the audience. So stay tuned with us, okay?